welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. We do these every single weekday at around 11 a.m. talking about the latest market news. My name is Jess, and I would like to apologize first of all for the sound and the quality of production in this live stream. We are back to the studio tomorrow, and I can't wait to be back to the normal setup. Let's take a look at the price of Bitcoin first of all. We have Bitcoin sat at $22,415 today, up 0.11% in the last 24 hours. And we have Ethereum sat at $1,567 as well, up 0.2%. So we're back to seeing that low amount of volatility in these high cap coins. Let's take a look at the chart of Bitcoin and see what is happening within the markets. So taking a look at Bitcoin on the 1 hour chart, you can see we have this level of support, and we've bounced this 3 times using the wicks of these candles. We are now testing that level. So I'm looking to see if we can hold this level and hoping we don't see an hourly candle close below the current price of around $22,370. If it does so, we may need to look for more levels of support. We clearly have a horizontal level of support at this point here from these levels of support over here, so at 22,320, and we have that used that as a support previously as well. I would say that was a pretty strong level of support. We also definitely have one over here at $22,150. So that's what we're looking at the hourly chart for Bitcoin, although I am hoping for a bounce. If we do bounce and move to the upside, we have a level of resistance currently sat at 22,560. Now, the markets have been incredibly slow since Friday morning at around 2 a.m. UTC time, I believe, 1 a.m. UTC time on Friday, where we saw a huge dump in the price for Bitcoin. If we take a look at this, we saw a drop from $23,420 all the way down to that candle closing 5.4% lower at $22,155. So we did see a huge move to the downside. And since then, we have seen basically some sideways action. I imagine again, the indicators are going to be pretty neutral on the shorter time frames because of the lack of movements over the last couple of days. You can see the RSI and the MACD are both very close to that baseline, not really indicating in which direction the markets will move. So we need to keep an eye on those levels of support and resistances and see what we have in the next coming days. And we will be doing these live streams, as I said, every single day at 11 a.m, keeping you up to date with the markets and the news. So let's crack on with the news for today's stream, see what is going on. We have, first of all, Binance tried to hire Gary Gensler as an advisor twice, apparently. And this is between 2018 and 2019, while Gary Gensler was teaching at MIT. And they offered him an advisory role at the exchange. So let's take a look further at this article. For those that don't know, Gary Gensler is the chairman of the SEC in the US. So he is the man pointing the finger at all the different crypto companies recently and trying to regulate the cryptocurrency industry in the correct way right now. So we can see here the world's largest exchange, Binance, reportedly sought to hire the current US SEC chairman, Gary Gensler, as an advisor on 2 separate occasions. According to a Wall Street Journal report, Binance approached Mr. Gensler at first in 2018 while he was working as a professor at the Massachusetts Institute of Technology, and he'd earlier served as chairman of the Commodity Futures Trading Commission between 2009 and 2014. And the first meeting occurred between the then head of Binance's venture investing arm, an employee of Binance Finance Bitcoin Trading Company, and Gary Gensler, and he politely declined the offer. And Mr. Zhu would later write about the meeting, saying, "I observed that while Gensler declined advisorship, he was generous in sharing licensed strategies." So Gary Gensler and CZ allegedly met in 2019 as well. And Gensler would continue being approached by multiple private firms while he was at MIT between 2018 and 2021. And now Gary Gensler met Binance's co-founder and current CEO, CZ, in March 2019 in Tokyo. And CZ would later interview Mr. Gensler via a video chat about a cryptocurrency course at MIT. And Gary Gensler would, however, become the SEC of chairman in February 2021. We can see here, Binance has always been aware of the reach of US regulations. The report by the Wall Street Journal also stated that since its inception in 2017, Binance has been aware of the global reach of US regulators. A Binance employee had reportedly warned in 2019 that any lawsuit from US authorities was equivalent to a nuclear fallout for the exchange's global business and staff. Consequently, Binance has always had strategies to prevent such scenarios, including creating an American arm, Binance.us. But the relationship between the two Binance entities has been under constant scrutiny from US lawmakers and regulators. More recently, US Senator Elizabeth Warren and a couple of others wrote a letter to Binance requesting information on its operations and relationship with Binance.us. And in late February, the SEC, the New York Department of Financial Services, and the New York Attorney General opposed plans by Binance.us to purchase Voyager Digital's assets for $1 billion. Now, I would say Binance is a company that really works very hard with pleasing regulators. They're not one that just ignores everything that's going on and tries to become a huge entity within the space, because they know as a cryptocurrency company, they could be the target of the SEC, and that could cause huge problems for them. Binance want to lead the cryptocurrency sector, and that is what they're after. They are a huge leader in the space, so they need to comply by these regulations in order to stay that way. They have such a top position within the markets. They don't want that to be destroyed, and the one way that can be destroyed is through regulation, if they're not following the regulations correctly. Now, we did see a couple of weeks ago, there was an article discussing how when Binance first started, it was full of software engineers and they weren't really complying with regulations in the correct way. Binance are looking to pay off all of those fines so they can have a new slate, essentially, and be able to start fresh, because they now closely watch the regulations and see how they can abide by them as best as possible. Now, we have discussed in the last couple of streams that Coinbase have launched a campaign. What is it called? It's called Crypto 435, something like this. And they are looking to get the cryptocurrency industry heard and help regulators regulate the industry in the correct way. I'm hoping to see something similar coming from Binance, because they do work so closely with regulators and try and get regulated in the best way possible. All these companies know the ins and outs of regulation within the cryptocurrency space. So having them step forward and offer their advice to regulators and offer us cryptocurrency retail investors an opportunity to get our voice heard by these regulators as well is very, very important. This is something we are seeing unravel in the next couple of weeks, and I really hope that Binance follows suit with this, as Coinbase have. Let's take a look at the next article and see what's happening here. We have Kraken Exchange is very close to launching its own bank. So despite the current regulatory situation and the rumors of the collapse of the giant crypto-friendly bank Silvergate, Marco Santori, the CFO of Kraken, announces the exchange plans to launch their bank soon. Now, Kraken has been under the limelight of the SEC for the last couple of weeks because they offer a staking service that the SEC has said is they are offering unregistered securities. They said Kraken are offering unregistered securities because of the way that the Kraken staking portal works. Essentially, you deposit your assets into Kraken and they do the rest for you. And it's not actually, the user isn't interacting with the decentralized network directly. So that's when it becomes an unregistered security, potentially. Kraken have said they are not. Coinbase have said that uses are slightly different and they do not fall into the same category as well, because there was a lot of fear about all of the different centralized exchanges within the US. But now Kraken are still making moves forwards and saying they are going to own their own bank. So let's take a look at this article. So where are we? The CFO has said that Kraken Bank is very much on schedule to open very soon. And he also mentioned that Kraken would have ballpoint pens and little ball chains and plan to order thousands of them and attach them to desks at Wall Street banks everywhere alongside their logo. So we're seeing marketing here across the big names in Wall Street. The statement of Santori comes only weeks after the increase in the challenging regulatory environment and the recent closure of its on-chain staking services for US clients to resolve the SEC claims that it had broken securities laws. Despite that, Kraken is continuing with preparations to build its bank. So that is what we have just been talking about. Continuing here, it's relevant to say that a new bank that emerges from the cryptocurrency business would do so at a difficult time for a sector still struggling with the widespread effects of the FTX collapse. Over the past few weeks, numerous enforcement actions have escalated regulatory uncertainties. Gary Gensler, the SEC chairman, stated last month that the Kraken settlement, which included $13 million in fines, should put everyone on notice in this industry. And while Santori declined to go into detailing about the SEC settlement to The Scoop, He mentioned that staking made up a relatively minor portion of Kraken's earnings and that Kraken neither accepts nor rejects any of the charges in the case. He's also concluded their appearance on the podcast, saying that the SEC will force American clients who seek staking services overseas to much riskier exchanges, and that the SEC action against Kraken's product makes the current regulatory climate in the US practically forces customers to use offshore exchanges that will gladly take Kraken's business share with so little as a VPN. So what we are going to see here, the US SEC have said that Kraken can no longer offer staking services to US customers. All a US customer needs to do, nothing of this is financial advice, but for a US person to get around this, all they do is set up a VPN. When you've got a VPN, it makes it appear like you're in a different location because it encrypts your data. So if US citizens want to stake their assets still for a centralized exchange, they could be using a VPN. And now, obviously, this is illegal. You still need to abide by your own jurisdiction regulations, even if you are using a VPN. But this is something that users may choose to do. So the Silvergate case, let's see about this. Less than 4 months after the crash of FTX, the San Diego bank Silvergate Capital Corp is in danger of collapsing. And Silvergate became popularly known as the crypto bank, as most of its clients are cryptocurrency businesses, which frequently struggle greatly when dealing with conventional banks. On March 1st, Silvergate declared in a regulatory filing that its survival was now in jeopardy. And after reports that the cryptocurrency bank Silvergate Capital was assessing its ability to remain viable, the Coinbase crypto exchange, Paxos Trust, and Galaxy Digital have stopped accepting payments made through the company. And obviously, we've been seeing rumors about this, but now it's very interesting. The main point of this article is that Kraken Exchange could be launching its own bank. And obviously, this would be pro-cryptocurrency, allowing us to deposit and withdraw from cryptocurrency exchanges. However, I presume that would be very nice without any of these barriers to entry within the cryptocurrency space. We've seen in the last couple of weeks that some UK banks have said we can only deposit a specific amount of our money into centralized exchanges at once. Some have said that we can't use credit cards to transfer, we can't transfer money from credit cards onto centralized exchanges or to buy cryptocurrencies. So we're seeing the traditional banks put in place these procedures that are supposed to protect investors, but are putting in those barriers for people to get within the cryptocurrency space. I imagine a bank owned by Kraken Exchange would not have those same barriers, but obviously it is also regulated and they do need to watch out for that as well. Let's take a look at the next article and see what is happening here. So Binance FUD could be getting to BNB as a $250 retest looms. So Binance have been the target of so much FUD since the FTX collapse. So FTX collapsed in November last year. And since then, there was a lot of fear around all of the different centralized exchanges, and they were trying to prove transparency. And since then, Binance have been the target for many different news articles, and we can see here that BNB is now getting affected by this. We are seeing over and over again CZ on Twitter trying to point out that this FUD is so unnecessary, that it's not true, and trying to remove all this FUD from the industry, but it is just growing and growing and growing. We can see here now that BNB is getting affected by this. It is currently looking like it could retest the $250 level, according to this analyst. Let's take a look at where the price of BNB is at right now. If we go over to TradingView and we take a look here, BNB USDT, we can see over here it's currently at 285 on that 1 hour chart. And yesterday we did come down to that $283 level. So we just need to keep an eye out on that and see what happens in the future. This is a lot of FUD. In my opinion, it's not a huge concern. I do think that Binance has tried to be as transparent as possible. The newspapers do seem to be targeting them a lot at the moment. If you want reliable cryptocurrency news, please don't forget to go to cryptosavingexpert.com. Go over to this big blue button here, put in your information, and make sure to tick that button to receive a newsletter that wraps up the week in cryptocurrency, and that is sent out every single Tuesday at 11 a.m. So we've just missed this week's if you haven't already, but if you sign up now, you'll definitely receive one on Tuesday next week, recapping the next week in cryptocurrency. So make sure to check that out. We also have completely free guides and cryptocurrency courses that you shouldn't miss out on, an opportunity of learning about cryptocurrency absolutely for free. Also, on this note, I haven't even asked today, please make sure to like and subscribe and press the bell notification button to help us grow the channel as much as possible. We are trying to get to 100,000 subscribers by the end of the year, and we need your help to do so. Please like, subscribe, press the bell notification button, and share with your friends as well. Let's take a look at the next article we have here. So Ethereum Layer 2 Scroll raises $50 million at $1.8 billion valuation ahead of mainnet launch. So, after raising $30 million in April, Ethereum scaling solution Scroll has completed another funding round today, securing $15 million from investors, including all of these big names across here. And the fresh capital brings Scroll's total funding to $83 million, according to the block. Though not officially confirmed, the $50 million raise pushes the company's valuation to $1.8 billion pre-mainnet launch, according to a source familiar with the matter. And Scroll is amongst the newest entrants in Ethereum scaling markets. The network uses technology to process transactions of Ethereum to reduce costs and improve transaction speed. Scroll is reportedly at its last step before the mainnet launch in about 3 or 4 months. So this is a layer 2 solution for Ethereum. We all know that Ethereum saw some big problems in the previous bull market where the transaction fees were incredibly high because the congestion on the network was incredibly high. So we have layer 2 solutions, and these are blockchains that can process transactions off-chain and then transmit that data back onto the main chain. And this reduces the congestion on the main chain, so actually helps everybody on the Ethereum network, and also allows people that use that layer 2 solution to have even lower transaction fees and faster transaction speeds. We are seeing a huge valuation here for this layer 2 solution of Ethereum Scroll. Let's take a look at the next article and see what is happening over here. So we have the SEC files emergency action against investment firm BK Coin for $100 million crypto fraud. The US SEC has filed an emergency action against Miami-based investment advisor BK Coin Management and one of its principals, Kevin Kang, for a multi-million-dollar crypto fraud scheme. Again, we do see fraud within the cryptocurrency space. You have to be incredibly careful and always do your due diligence. Let's take a look at this. The commission said in a press release that it was able to obtain an asset freeze, appoint a receiver, and other emergency relief against the defendants. The SEC alleged that from at least October 2018 to September 2022, BK Coin raised $100 million from around 55 investors to invest in crypto assets. However, the investment manager and its principal used the fund for Ponzi-like conduct and personal use. So according to the securities watchdog, BK Coin and Kang promised investors that their money would be used to trade crypto assets. They also claimed that the company would generate profit for investors through separately managed accounts and 5 private funds. According to the SEC, the defendants did not use the fund for its intended purpose. Instead, BK Coin and Kang commingled investor assets and used over $3.6 million to make Ponzi-like payments to pay investors. So this is the scenario where they took new investors' money and gave that to earlier investors. So that is what we're seeing there. According to the SEC. Anyway, we will probably see more news unravel about this in the coming weeks. The SEC also alleged that Kang used proceeds worth $371,000 for the scheme to pay for vacations, sporting events, tickets, and a New York City apartment. Further, Kang tried to conceal the unauthorized use of investor money by creating false documents with inflated bank account balances to the third-party administrator for certain of the goods. So that is what we are seeing now. Obviously, the SEC is cracking down on the cryptocurrency industry right now, and this is a good time that they've cracked down. We do need regulation in this space, and this is exactly why. We don't want people to be scared away from cryptocurrency. If people have come into cryptocurrency and this is what they've invested into, they will choose to just not touch the assets again, or at least for a very long period of time. So if we get the regulators involved and they help shut down things like this, right now there's not enough repercussions for bad actors in the space. So regulations, I think, are something that we need to adopt within cryptocurrency. We just want to get that right. And that is why I'm so pleased to hear about Coinbase's new campaign and hoping that other centralized exchanges move on the same journey as well. Let's take a look at the next article and see what is going here. The future looks bleak for USD dominance in crypto markets, and here is why. Currently, the US dollar currency and its related stablecoins are the primary on-ramp channels to the cryptocurrency markets. However, the market dominance could be challenged in the future, particularly for the dollar, given the unfriendly banking environment in the dollar, as well as increased regulatory pressure. So behind FTX's demise, the use of USD in the cryptocurrency market has consistently dropped relative to USD stablecoins, including euro trading pairs. According to a report by Kaiko, last year the number of new US dollar denominated trading pairs declined by 18% across all exchanges from 400 to 326. Now that is actually a very considerable drop. There is also a chance that the USD market share will plunge further in the near future, considering the ongoing situation at Silvergate, one of the few banking institutions widely used by crypto companies to process US dollars on ramp. And so on March the 3rd, Silvergate continued its flagship against instant payment network SEN and reported owning 94 exchanges and 894 institutional investors, making it even more challenging to process US dollar payments in the cryptocurrency markets as there are scant options left. And the suspension of US dollar bank transfers by some exchanges also intensified the complications with US dollar payment rails. On March the 6th, Bybit announced its temporary suspending USD deposits via wire transfer, including SWIFT, and Binance announced a similar service disruption in January, saying it will no longer process USD transfers below $100,000 via SWIFT. So we are seeing this. Now, this is a very interesting situation to unravel. This could have a very big effect on the cryptocurrency industry and not something that not something that I expected to see in the shorter term. Very interesting to see other fiat currencies take a bigger market share in terms of their stable coins. And maybe we'll see more of a widespread use, like as I know, every person that I know within the UK that is investing in cryptocurrencies seem to use US dollar stable coins. I use US dollar stable coins, but we may see the adoption, but it looks like we are seeing the adoption of different fiat currencies. So very interesting from there. We may see more diversification over the stablecoin market. Currently, USDT from Tether has a huge market share, but maybe that will diversify a little bit more. And that is always a good thing, in my opinion. Let's take a look at the final article for today's stream and see what is happening here. So Ethereum's co-founder Vitalik Buterin bagged $700,000 on dumping Mops, Cult, and Schick. So Ethereum's co-founder Vitalik Buterin has made nearly $700,000 selling off a significant number of free shitcoins airdropped to his wallet address. Now, we actually know Vitalik's wallet address, and obviously blockchains are transparent, so we can see these transactions take place. It looks like he's dumped a load of these tokens. Many different projects, actually, when they are launching, decide to say they are sending a certain amount of their tokens to the known Buterin wallet. And that is to say, look, Vitalik Buterin has 2% of our circulating supply or something like this. And that is to incentivize people in the space that don't really understand what is going on. So on-chain data by Luke On-Chain showed that Buterin dumped 50 billion Mops for $2,000, 10 billion Cult for $91,000. I would say Cult is one of probably the most well-known projects that has decided to do this. And we can see 500 trillion Schick for $600,000. Now, Vitalik Buterin is just getting these absolutely for free, and it's good for the project that they can say, Vitalik Buterin's got some of these tokens, and people within this new to the space that don't understand how they can do their due diligence may think this is a brilliant thing. But what they're doing is they're sending these tokens, a huge amount of the circulating supply, to one user, and that means that user can dump that token. So we do need to be careful when this is done. Obviously, Vitalik has shown that he can do this here. Cult was trading at this value here and is down over 10% in the last 24 hours. Schick has had an amount sold represents 50% of the token circulating supply, and it's down over 90%. And Schick has also slightly recovered to a 57.54% loss on the daily time frame. So we have seen a huge dump in the value of these assets. We do need to be careful putting a huge amount of circulating supply into one wallet, especially when Vitalik hasn't even signed up for these. He's not said, I want these tokens. He's just been given this free money. So obviously he's taken advantage of this and chosen to sell those assets. Just something to be aware of. We need to do our due diligence, see how the circulating supply is spread across different altcoins, see how the tokens are being released into the circulation and being removed from circulation, and seeing those big whales within the space. Now, many different altcoins have these big whales. And sometimes you don't know who those wallets are owned by, but we just need to be careful about this because holding a huge amount of the circulating supply means that the token can be dumped pretty harshly. And we have seen this here, according to this article about Vitalik Buterin. So we need to watch out for that. Let's take a look at the price of Bitcoin quickly. We have Bitcoin set at $22,415. We have Ethereum set at $1,567. So we are still at those same levels. If we take a look at Bitcoin, it's still holding that level of support for now. We have 25 minutes left of this hourly candle. So I'll be waiting to see how this happens and seeing if we do get a bounce from this level of support. If not, I'll be looking at those lower levels of 22,320 and 22,150. But that is all we have for today's stream. So thank you very much for tuning in once again. My name is Jess and we do these live streams every single day at 11 a.m. Tomorrow's maybe a little bit earlier, but I'll put a tweet out so that you all know and when we're going live so that you don't miss the latest cryptocurrency news. Thank you very much for watching. Please don't forget to like and subscribe, and I will see you back here tomorrow.